Happy Wednesday out there, Team 42. It's your skipper here at Darius Dale to present our macro minute for Wednesday, April 17th, 2024. As always, we'll start with the executive summary from today's leadoff morning note. If you would like to review the analysis supporting these conclusions, as well as what to specifically do about them in your portfolio, you need to be a client of 42 Macro. So today's key macro event is our Jay and Janet want a soft landing theme is still intact, but our confidence is receding. So the nuance there is yesterday, Fed Chair Jerome Powell discussed monetary policy alongside Bank of Canada Governor Tiff Macklem at the Wilson Center in Washington, D.C. Powell's remarks confirmed our Jay and Janet want a soft landing theme is still intact, albeit with slightly less confidence. In terms of market implications, we've remarked in our recent work that the second term Powell Fed is one that is kowtowed to fiscal dominance and is in the multi-year process of accepting 3% as their de facto inflation target. Specifically, we do not believe Powell or his peers on the FOMC will opt for a recession that is likely required to get inflation sustainably to 2% if the choice is between that outcome and talking tough while implicitly accepting 3% inflation. That is structurally bullish for risk assets like stocks, credit, commodities, and crypto, and structurally bearish for defensive assets like treasury bonds and the US dollar. I refer to our March 21st leadoff morning note and our March 21st and April 12th around the horn presentations and/or our April 2024 macro scouting report for more details on that long-term theme. As always, transitioning to our 42 macro dashboard here. As always, we'll wrap up with the question from our community. This one reads regime versus geopolitical risk. So it reads, hi Darius, new member, sweating during this correction and wondering the following. While I realize the regime is still risk on and your reasons for it, while I also stand that you don't like to recommend trading geopolitical events, wouldn't you agree that the geopolitical risk of the magnitude currently at play would just imply default risk off due to the inability and/or therefore a certain uncertainty of the situation? So it's a long question. So let me just unpack that real quick before you continue on in the question. So yes, this is obviously a serious situation. Anytime you're talking about a war that could potentially rope in the U.S. and the rest of NATO into fighting, a potential nuclear power, we're talking about some serious problems here. So I don't want to dismiss what's happening over in the Middle East and obviously what's been happening over in Ukraine for the last couple of years as something to write off. But what we will say is that, nobody in history outside of maybe Soros and Druckenmiller have proven an ability to be able to consistently weaponize geopolitical frameworks into making money on a consistent basis in asset markets. Most of the time, geopolitics does what it does, which causes correction because investors rush to buy, put protection, dealers rush to delta hedge that with short futures positions, and then we get back to our merry day. And so we could easily be sitting here, this time in April at the May OPEX with all those Vanna and Charm flows from the April rush to buy put protection coming unwound. That's not to say, this is not a serious situation, but what we want to stress is that, when you build a risk management process, whether it be systematic or discretionary. We obviously believe systematic is better than discretionary because most people suck at discretionary because they suck at predicting the future. And I meant no words about that. But whether your investment process is, you need to stick to your investment process. Waking up and responding to headlines about Israel and Iran is not a damn investment process. It just isn't. Dance with the bell that you brought to the ball. And so that's our general take on that. That doesn't necessarily mean we're going to be right on the outcome of what's happening over in Israel, Iran, or we're going to be right on the outcome of the sustainability on our view that the current risk on market regime is likely to be sustained throughout this geopolitical risk. But that, it's neither here nor there. We have our risk management systems in place. And if those risk management systems tell us to take down risk, we'll take down risk. So getting back to the question. Moreover, perhaps to stoke some confidence, would you be willing to delve a bit deeper in the U.S. liquidity scenario currently at play via taxes and Treasury and the Fed, and what we might expect in the near term? The long end bond yields are getting to concerning levels for a risk on regime, in their opinion. Signing off, seriously concerned. So let me just work that backwards. Please don't infuse your emotions into your risk management process. Being concerned, being jubilant, being happy, being sad, being hot, being cold. These are all things that have no business or bearing in your portfolio construction and or risk management processes. In our opinion, I think you need to check your emotions at the door and try to remain as dispassionate as humanly possible, so that you're consistently putting yourself in the best opportunity, the best chance to make money and protect gains in financial markets. The people who struggle in investing are the same people who struggle in the NFL draft, are the same people who struggle with playing the lottery, are people who have a poor sort of emotional, they have low EQ, and they're constantly responding to their emotions in terms of making decisions that are not necessarily optimized for results. So getting back to the question, can we delve into a bit deeper into the U.S. liquidity scenario at play via taxes, Treasury, and the Fed? That's exactly what we did in this morning's leadoff morning note. We did have about 15 slides on that in terms of charts on what's going on there in this morning's leadoff morning notes. So I'll refer you to that. So we'll wrap it up there. Darius Dale presenting our macro minute for Wednesday, April 17th, 2024. Best of luck out there, everyone. A wonderful day. Best of luck. We'll catch you back here tomorrow. Cheers.